Joining us now to share his commentary on the day's market performance is Jason Horn from Steyn Capital Management. Jason, great to have you with us once again. And the Bank of Japan, all eyes on the Bank of Japan. They need to increase their rates. It looks like they've got no choice. They sold a whole lot of bonds off in a big flurry earlier on. What's your take on what's been happening?
Yeah, thanks, Ray. Very interesting what's happening with the BOJ. I think just to frame it for our viewers, we've historically had yield curve control, so the Bank of Japan effectively capping yields in Japan up until about early 2024. And at that point in time, rates were capped at 1%. And now what has happened is you've seen rates continuously increase as we have policy normalization in Japan, and obviously they've always been trying to stimulate inflation, but now we've got to a point where inflation is above target for almost 3.5 years now. They need to raise rates, but in a country where debt to GDP is sitting at 230%, when you've got your bond yields at 20-year highs, becomes rather problematic. So you've got this issue where Japan needs to raise rates, to tighten monetary policy, to keep inflation in check. But at the same time, you've got a new regime, new prime minister in place who's looking to fund their supplementary budget, which is 1.7 times larger than the previous regime. So you've got them doing this fine balancing act, and thankfully for them, it does look like the broader market is more interested in Japanese yields. We've just had this auction where it's more than 4 times subscribed. So it does look like the market has found a clearing level for these bonds. But yes, in the next 2 weeks or so, it's going to be very interesting to see what they do with rates.
Yeah, it most certainly will be. I love their prime minister. She said it's crazy if you go and increase interest rates. It was like 2 weeks ago, and today she's like, we better increase those interest rates. It just shows politicians versus bankers. You see, there's a big difference there. Right, High Prop, you would have heard them in our news bulletin, looking at expanding the food court at Canal Walk, looking at new projects.
Yes, absolutely. I think more importantly, it's quite good for the JSE. I mean, we've seen a lot of corporate activity on the JSE with new listings and a lot more accelerated book builds. Go back a couple of months ago with what Volterra was able to accomplish. So it does seem that corporates are being quite savvy, looking to increase their funding to continue with these projects. And yeah, it's a stock that's been on a good run, and the company's clearly taking advantage of it, being fairly savvy here, and something that the market quite likes. I mean, we saw it open up a bit lower early on as a result of the results of the book build, but yeah, it does seem to be recovering quite strongly at the moment.
Yeah, quite nice. Something else to watch today is Vodacom, and you would have heard there with the CEO saying it's a landmark deal. It's something that's absolutely wild with Safaricom, and I suppose it is. They've got a 55% stake now. It's big. They're following up on MTN, who's been expanding into Africa, so that is landmark, I suppose, isn't it?
Absolutely, and as is the case with most of these operators, the fintech side of the business is where the real value lies. Market doesn't seem to be taking it too well today, but I guess the point is Safcom's been up over 80% this year, so yeah. Market's probably questioning, yes, you are taking on all this debt, increasing leverage to buy this asset, albeit high quality asset. But what has taken so long to get this across the line? But overall, yes, high quality asset, but it does in the end reduce Vodacom's heavy reliance on the South African leg of the business. So all in all, a good deal, but it does seem that the market is questioning probably the price that they're having to pay for this at the moment.
Yeah. All right, something else that's kind of piqued my interest is the US President Donald Trump meeting with the NVIDIA CEO. And I love the way he finished the interview saying he's a very sensible man, which probably means he says, don't go and sell those chips to the Chinese. It's got to mean that. And it looks like there's, well, agreement.
Yeah, look, there's a lot of intense lobbying going on, and yes, it is quite difficult to get to grips with what Donald Trump's trying to do here. So I think more broadly speaking, if we think about a trade deal with China, we we can't just keep talking about soybeans. So there's going to have to be some deal at some point. And with all this lobbying, there's a lot of concern, not just with Donald Trump, but within Congress around this national security threat. So the unintended consequence of this is China's looking at increasing chip production themselves. So show me the incentive, I'll show you the outcome, right? So we're already seeing the likes of Huawei increasing their chip production and China really making this push towards being independent of US AI exports. So yes, there's going to be some compromise here at some point, but to Jensen Huang's point, China won't accept these deals when they're not selling the latest and greatest tech.
Yeah.
But yeah, it's going to be very interesting to see how this plays out.
Well, watch this space. All right, time for your space, your stock pick. What are you looking at today?
I'm picking Prada. So it's an Italian luxury group built around the Prada and Miu Miu brands, and now they've recently added a third major brand in Versace. So I think both core brands have outperformed through the recent luxury slowdown, which we've seen post the COVID boom. But just to give you an example, Miu Miu's revenues have more than tripled over the last 3 years. And the more established Prada brand has been able to remain stable through this contraction. And yeah, I think we think that Versace offers long-term turnaround upside, given its strong global brand recognition and Prada's proven playbook with Miu Miu. And yeah, the stock trades cheaply at 13 times PE, and this is partly due to its Hong Kong listing. And there are potential catalysts here for, think of a future Milan relisting and or take private by the Prada family, who owns 80% of the business.
Sure, that is so interesting. Yeah, the devil wears Prada, but does he wear Versace? There's your question, Jason. Jason, thank you so much. Good to chat to you. It really is on Business Lunch. Good to see you again. Right, now, that was Jason Horn from Steyn Capital Management.